So I've been investing $250 every week for a couple of months. I just upped that up to $300. My account balance is almost up to $9,000. It's at $8,600. I have an auto deposit schedule in Robinhood, and I want to address some questions that I've been asked for the past week since my last video, and just general investing in general. So let's go ahead and bust open the app, hit that screen record. So we're looking at Robinhood. Now, first and foremost, Robinhood, storied history. Doesn't matter which app you use. No, guys, the most important thing is to start. My primary purpose in doing this series here is to show you the value of consistency. Okay, let's put consistency on the screen. Consistency. Consistency is much more important than optimization when it comes to investing. Optimization is important. Making sure that you're in an ETF that you like and that fits your morals, right? Maybe you want to only invest in companies that, don't do things with animals, or you only want to invest in growth, or you only want to invest in a certain country or industry or whatever. All of that is cool, but all of that comes after starting, okay? Having money gives you options. And I want each and every one of you to have options, okay? What's really, really cool about this money, this is real money, right? I started this account from zero. I have my real long-term portfolio elsewhere, which I'm not gonna share because that's up to me, that's private. So this is the one that I created for you, for all of y'all. And each of you should have a long-term portfolio, okay? The power of this money, even though it's just for this series, is that this is real $8,600. Okay, at any point in time, I have the option to spend this money on whatever the heck I want. For example, this Rode mic is $200, right? The camera that I'm filming on right now, this is a Fuji X-H2, about $2.5 grand a pop. All these lenses, set design, all this costs money, right? I could invest it into something else, right? Maybe I see a trade, I'm a day trader, right? My main channel is on day trading. This is the new channel. I could go and put this in a trade and try and flip it into something else, right? There is a ton of options with what you can do with the money. If we actually look at my holdings here, let's go to VOO. Okay, most of my money is in this Vanguard S&P 500 ETF, right? It's currently priced at $553.83 per share. And you can see that the market value is $4,700, right? So right here, we don't have to do the math. Robinhood does it for me. 54% of my portfolio is this. So let's just knock out a few easy questions because I haven't really done this. One, why do I have so many random stocks? When I started this series, I was letting other people choose what I bought. Why? Well, because my goal was to show that consistency matters more than optimization. I'm going to start to layer in optimization. I'm going to get rid of some of these things. I might kind of do this in a cyclical manner where I put out feelers and see what people want me to buy, and I'll just spend the money on those stocks, really with very minimal analysis, honestly, just to show you the long-term power of getting into the market. I am going to bias this account nonetheless into the S&P 500 because I don't want to waste a ton of money. Luckily, I'm blessed and privileged to be in a position where I do make money from you, not on this channel, but hopefully one day, would like this to pay for itself. But I do make money from YouTube as well as a trader and blah, 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 blah. So I can afford to do this. But again, the point, the magic number, the thing that really matters the most, guys, is starting. It doesn't matter if it's $5, $20, $50, $100, $1,000, right? More is cooler, it's better, but starting is really, really important. This is under a year since I started this series. You can go back to the channel, see what I have. Second important question, Forrest, why VOO? Why the Vanguard S&P 500 ETF? Okay, so whenever you see these charts, and I'll throw one on the screen here, when you see these charts talking about long-term investing, hopefully if it's a well-made chart, there should be a legend on there. Anytime you look at data on a screen, there should be a legend, so we'll include one. But there's this implied or expected 8 to 10% return. So the S&P 500, often, when we talk about it, investors amongst each other, we expect this 8 to 10% return, which gives us these millions of dollars in 30 years. So right, when I do this over time, I should expect a return of a couple $1 million. Let's go ahead and do it right now. So let's go to ChatGPT, okay? And let's just ask ChatGPT. If you don't have ChatGPT, you can go to the website. It's just chat.openai.com. And let's say, how much money would I have? Well, let's do it with the voice. Hey chat, how much money would I have if I invest $300 a week for 30 years? Assume my starting balance is $8,600 and that my money is compounding annually at 8 and 10%. Show me the returns on a line graph and make sure you include a legend. Also include on the chart the total values at year 0, year 15, and year 30. So we'll go ahead and let ChatGPT do its thing, and it's gonna spit out a chart. I do this very often. This is gonna show you the power of doing this long term. I'm gonna do this in every single video. I always forget sometimes. I think that like, yeah, people just know, but like, no, you guys literally don't know. That's why I'm doing the video. That's the whole point of the series. So I'm gonna make a point to do this for you guys every single time to really show you. This is also why I'm doing it with real money, right? Doing it on here, a lot of people will show you this graph, okay? But it's really important to be able to see this on the long term. So this is really small on the screen, but we'll blow it up for you in the video. But you can see that the total value on that 10% graph, a line, which is the top line, is 2.7 million. The bottom line is 1.8 million. That's just this account, okay? I'm gonna say that again. That's just this account that I started. I've been doing this for years, guys. I have another account, okay? Now, I'm blessed and I have gratitude for the life that I'm able to live, okay? But everybody starts somewhere. This line, you might be further left on this chart, on this path, but you're still on the path. I'll say that again. You might be further left. You might be on year 0, year 1, year 2, year 3, and those values aren't very exciting, right? We can see them at year 15. It's at 450,000, so under $1 million. But eventually you get to the right side of this chart over time and things start taking off. One of the biggest mistakes that people make, right, tied to a complaint, right, this defeatist attitude, honestly, this victimhood mindset is this, well, it's not a lot of money. It's gonna take a long time. Here's a question for you. Do you plan to be alive in 30 years? If you're older, maybe not. Do you have descendants? Maybe they'll be here. Do that for them. I'm 33. I'm gonna be alive in 30 years, hopefully. Live or not though, I'm gonna plan to be here, okay? And I'm gonna get that couple $1 million. Now you're probably saying, Forrest, with inflation and all that. Guys, it doesn't matter. None of that matters. Seriously. Inflation and all that existed 30 years ago. Imagine the people today who are older, who are 30 years ahead of you, who were planning 30 years ago. They're just better off than everybody else right? Right? So stop making, it makes no sense not to start, guys. It makes no sense. 30 years is going to pass. It's going to pass. You're going to be there in 30 years. And imagine you're sitting here in 30 years with $0 invested in the market because you thought it was too little. Okay, so VOO is something that you can buy. You could also look at VTI. I like Vanguard. This is a total stock market ETF. So what's the difference between, this is the third point I want to bring up. What's the difference between the S&P 500 and a total stock market ETF? So the S&P 500 is essentially a fund that is weighted or follows the performance of the 500 biggest companies in the United States. Okay, this fund is managed as market capitalizations or as the total value of these companies shifts. They shift what is in that basket of 500. The total stock market ETF, right? The verbiage there is different, is a fund of the total market. So the total market isn't just looking at the 500 biggest and best, it's looking at everything. So there's even more diversification there, which is going to allow you to grab more growth stocks, right? It'll pick that up, but you're also going to get many more losers, all right? So S&P 500 is much more blue chip. Total stock market has all blue chip, everything, right? I prefer VOO. Obviously, do what you want. The other thing that I want to bring up is dividends. Now, you can do dividend investing. I don't. I focus on growth. So all the charts and things that I display are based on growth. The major difference between dividend investing and just growth investing is cash flow. A lot of people say cash is king, but I say when. Okay, cash is king when you need money now. Cash is also useful, and I tell you this as an entrepreneur, I invest in real estate. Cash is useful because it could be leveraged. Really, any asset could be leveraged, but cash is very, very liquid. You can use it now, right? If you have money tied up in, anything, right, you have to make it liquid in some way, right? Either by, borrowing against it or selling your asset and turning it into cash. Cash is fine. The problem with just doing dividend investing, though, is that the growth on those dividend stocks is always worse than just focusing on growth stocks, right? Vice versa, right? So your portfolio balance is going to go up bigger over time if you focus on growth investing, but you're going to have less cash flow. So if you want to get cash out of that, you have to sell shares, right? So that's the difference. Very simple concept or something to think about. This isn't necessarily something you have to do, but something to think about is that you could focus on growth investing for a long amount of time. And then once you hit a certain pile of money that you like, you could turn that into a dividend portfolio, essentially a cash engine at that point in time. Okay. So again, portfolio here at $8,625. 50% is in VOO. I have this Spirit Airlines call, which shouldn't be in this account, but got a little antsy, just having fun. I am a day trader. Might wait some more into things like AMD, NVIDIA. There's some stuff in here that I just really want to sell. I keep saying that I never do, but I literally don't manage this account, guys, which is kind of the point. Okay. The point is to let this grow. So I'm going to go ahead and just say at $10,000, we will manage this. Okay. But it's really that simple. And we'll rebalance. I think at, every major breakpoint, 10, 20, 30, 40, it's going to be really cool to look back at this series. And you got to ask yourself, as I keep putting this out, as you're subscribing for sure, you're going to ask yourself, why haven't I started? Okay, so I want you to start. My goal, my mission, my task for you right now is to start today, right? Stop pushing and putting off what you know is really important to you. Stop pushing and putting off what you know is going to have a positive impact on your life, your future, and the people that depend on you. I'll say it again. Having money gives you options, okay? You don't necessarily need to spend it. You don't need to buy a Lambo. You don't need to do anything. That's the cool thing about having money. You don't need to do anything. Okay, and as needs arise, right, not all needs can be met with money, right? Some take emotional attention, some just take time attention, but there are a lot of needs that arise that cost money, right? Or that money can mitigate or stop, okay, prevent entirely. And you can just throw money at those problems, which is gonna allow you to do whatever you want, right? You won't need to do anything. I want that for all of you, okay? For a quick rundown of where I come from, right? My parents were in the military, lived in military housing, didn't have a ton of money growing up at all. My parents were divorced. I started working when I was like 15. We were brokety broke, okay? I remember my mom moved into a house after I graduated high school for like $33,000. It was a small HUD house, right? It's the house I lived in. Had to move back home for a little bit. You can watch some of the podcasts to see why, but had to move home for a little bit and didn't have a room, right? We weren't like well off like that. I was well taken care of and well loved. Shout out to my mom for that. The point of that is I still got here today. Okay, I do okay. I'm not gonna sit here and say I'm an omega rich, but I have enough money to essentially do what I want now and continue to work on my passions. That's what I want for all of you, regardless of wherever you come from. Some of you are better off to me, and that's awesome. Use the head start that your parents have given you. I'm not going to be a hater. Use the head start that your parents have given you and continue the snowball. There's no reason, if you have a leg up, for you to take time off, okay? Right, keep putting your money to work. Even if you don't want to do anything, put your money to work so that you can continue their legacy. If your parents were grinding it out and didn't have that opportunity, well, you've watched this video and you have the knowledge. Knowledge is power, and put your power to work, right? Power can produce fruits that are useful to you. Put it to work. See you in the next video. Peace.
I'm never gonna look back, 'cause damn, I was built to last. You move slow and I move fast.